Good morning, everyone. Or good afternoon. How are we doing, folks? Yep, we'll be getting started in just a minute. Oh, yeah. Give me 1 second, please. Okay. Is my volume better now? Compliance, Kyle. Okay. I guess we lost power last night, Roger, because both my roadcaster and your roadcaster were off, and both the computers were already reset this morning. You guys want to know something funny? Somebody asked me about the baby yesterday and they said, "How is she sleeping?" And I said, "She's a great sleeper, just like her mom." And I said that because I'm not a very good sleeper. I have really bad insomnia, so I don't sleep very much. But my wife was watching the stream. So as the VIP show was going on, I got a text from her, just like, "Meow, meow, 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 meow." Yeah, she caught me red handed live.
Okay.
That's what I think, Hedva.
What'd you
I
say, Matt?
Hedva said it's a good thing to sleep. I think it is too. I wish I could. I'm jealous.
Yeah, I sleep like a pig. All right. Good afternoon, everybody. Boy, I'm having a lot of time to trade today, right? I'm being sarcastic. I guess the afternoon session will be my thing. I really want to trade today, and I haven't had a chance to, which is bothering me, but it is what it is. You guys come first. Um, my wife asked me, "How come you don't trade more?" I said, "Because I'm teaching all the time." I said, "I can't. I don't have the time." Um, all right. Yeah, I'm going to talk about futures today. Let me just turn on YouTube. And today's there's not going to be any selling or anything like that. This is just educational stuff. I want to give you guys a little class, a little session. There we go. By the way, did anybody join me? Welcome, Richard, Kevin, Devin, Sherman, Raj. How are you guys on YouTube? And now let me say hello to everybody here. We got Brendan, Tony, Scuba Chris, Jill, Hedva, HG, Brendan, RV Hannings, Robert, Carlos. Hey, Carlos. Pete, Marina. Hello, Marina. Ooh, aloha from Hawaii. You too. Love Hawaii. Jeanette, Cyrus, Wild Rangers. Yes, it is Wild Ranger. Jill, Penny, Michael, John. Glad to see you too, John. There's always another trial. Absolutely. Plus, the market's not really going. By the way, did anybody get in and make money on CLDI from this morning and PROK, those two baby stocks I gave you? Thanks, Cyrus. Just do more of it live with us as you teach. Okay, there you go. Jolene, I will, but not today. Today's a lesson. I have to do a lesson in trading. Ken, good morning, Ken. Good to see you. Rachel, Dan, Christopher, Mary, Gus, Wild Ranger, Alan, Richard, Julio or Julio, sorry, Julio, Michael, Michael B, Kirk. Yes, the 10 a.m. is going to be recorded. They will make sure it's recorded. Ray, Stephen, Jesse, Kathleen, Scuba Chris, Carlos. Good morning, Carlos. George, John, Steve, Mike, Pauline, Bob, Marlo, Cyrus, Zoom user, iPad, Sambron, Maria, Dave, Ruthie, William. Boy, a lot of people here. Jim. Oh, you made 200 on CLDI. Good, good, good. William, good morning. Got in on CLDI. Good, 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 good. Ed made a grand on SPY. You're welcome. Duncan, um, work got in my way. Yep, tell me about it. This is being recorded. This is always being recorded. And this session is going to be put in the members area for Trading Zone Live and Alpha Zone Pro. Which program, Pit or Live? I don't know what your question is, Michael, about which program is what. It was from Trading Zone Live today. I haven't given any trades into Pit yet. I'm the only guy that does Pit, so when I'm not around, which is hardly ever, but when I'm not around, the Pit is kind of quiet. But both Matt and I are looking at the S&P all the time for Trading Zone. Bill Ivano made 30% on Proc. Good, good. Pearl, John. Hey, John, how are ya? RV Hannings, I was getting rid of Raccoon. Ooh, Raccoon. Oh, made 36% on CLDI. I'll just send you an email. Thank you. I appreciate that. iPad. Is it time to get out of CLDI? I don't give you market timing on those trades. You should have taken a profit when you had 45%. If you made 45% on a trade, why would you even ask me that right now? The stock went from 105 or 106 to 156. I think that would have been a good time to take profit. Mary made money. Sandy made money. I'm not going to monitor these for you. I'm just giving you the heads up. Afshin, Geneva, Deanna, David, Ken. Bob says, sorry, everyone was bad with my situation morning. Sorry. Oh, sorry about that, Bob. I figured something was up. iPad made $800 on the SPY short this morning. Would you grab all those, Matt?
Yeah, yeah.
Okay. Richard, good afternoon. And I think it's time for us to start. Liberty Ranger, the guy since you forgot yesterday. Hey, Liberty. Naples fan, Jason. How did you manage to find CLDI and Proc? I'll show you tomorrow morning, Fern. It's my handy magic scanner and me reading price action. John says, if we can't make it to your session pre-market morning, is there a way to get your forecast of what the market day will be like, trending or choppy? Just tune into the Telegram channel. Hedva, how was my advice this morning? Was I pretty accurate? Going up. By the way, just I'm going to say, I hate to say I told you so, but real quick. Real quick. We huffed, we puffed, and what happened afterwards? And we're still below that level. Now, it's fun and games when it happens, and everybody likes to be a Monday back quarterback, but sometimes Uncle Roger sends you emails. Was that a Picasso drawing or what? That happened at 10 o'clock. Chris says you were spot on. You're better than a crystal ball. Steve says you told us so. I did. Was I right? Look what I wrote here. We had a very strong open. This is a 956. But look at internals right now. ADD and tick are not pushing higher and Volt is flat. Right there. Not always, Jolene, but often enough. And I told you this here too. Look. This is at 9:54 in the morning. Okay? So don't say I didn't warn you. And I told you in the morning show the same thing. Told you, Fred says made money more than once on your market open predictions. Very good. Excellent. I'm glad to hear that. That makes me very, very happy. Yeah, they stopped CLD. They do that all the time with those stocks. Hey, Naples fan. Hey, Jason, Thomas, James, everybody on YouTube. And today I'm not going to make you switch from YouTube to Zoom. You can be wherever you want today. There's no webinar. Okay. Craig says you were on fire this morning on the opening playbook. That'll also be put in the members area. R, what do you want to give your email and number to? What's the purpose of you giving your email and phone number? Hey, Peanut, how are you? Okay, so I want to talk a little bit about futures today because a lot of people now just as a this is an education session. There's a risk of loss in futures trading. You could lose a lot of money in futures trading. Um, but grab that from Keong, would you, Matt? I'm up 10K this morning. Thank you. You're welcome, Keong. You're welcome. Tony made $340 today. Thank you, AZP. You're welcome. You're welcome. This is how I like to start the morning, with people telling me how much money they're making instead of how much money they're losing. It's always a good start. Now, folks, the reason why I want to talk about futures is because a lot of you are interested in trading this ticker symbol. Okay. MES. Hey, Peter, good to see you. This ticker symbol, which is MES. Ellen says, first time taking trades, my gains 40%. Thank you. You're welcome. You're welcome. And ES. Oops. ES. Now, you'll notice that they move together. Look, they mimic each other. They're exactly completely tick to tick aligned. Now, folks, let me explain to you something about futures versus stocks, okay? This is something really important that you need to understand. A futures contract is a fixed priced asset. Fixed priced asset, okay? Don't know why, Kyle. You should have been doing good. People are making money today on AlphaZone. Anyways, you may need to listen to more of my lectures. We in the trading zone, we made money 2 out of 3 times today. Okay, let's continue. So futures are fixed contracts. You know how you can buy 5 shares of Nvidia, 10 shares of Nvidia? You can adjust Nvidia to your share size. You can't do that with futures. Futures are fixed contracts. Well, what is a fixed contract? A fixed contract is, first off, futures came around. Let me tell you how futures were invented, okay? Kyle, I don't want to argue with you, but first you said AZP, and then you said Trading Zone. So did you lose money in Trading Zone, or did you lose money in AlphaZone Pro? And second of all, how could you have lost money in Trading Zone Live today? Please explain to me this. I just want to know here. Let me just show you this. Let me ask everybody else. Did anybody else lose money in Trading Zone Live today? Wait. Did anybody lose money in Trading Zone Live today? Okay. So I'm not even gonna entertain. I said today. I didn't say last trade. I said today. Today was 3 trades. Is anybody losing money on AlphaZone trade today? I said all today. I didn't say last trade. I said today. Today. Okay. Thank you. That's what I thought. So obviously there's some issue between you and whoever not taking the right trades. Now let's move on. So I don't want to get into these discussions. I have a lot to teach to you guys. All right. Yeah. Send me an email if you're not understanding instructions, then you're doing something wrong. Okay. All right. Good. Because everybody made money today. Nobody who did what they were supposed to do lost money today. Why? Well, let me show you why. Because you see, let me show you why. It's called simple math. See, go short at 621.65, take profit at 621.47. This is higher than this, which means you make money. Then go short again at 621.82. Take profit at 621.09. This is higher than this, which means you made money. That means you made money 2 times. The third time, you would have gotten filled and you would have gotten stopped out for a very small loss of less than 20 ticks. So you would have made about 100 ticks and you would have been down about 20 ticks. You would have been net positive 80 ticks. 80 ticks, $5 a tick is how much? $400. E-mini S&P, $4,000. Thank you. Come again. All right. All right. All right. Hey, Ron. Now, I want to ask you a question, Ron. Did you take all 3 trades? today, or you just took the last one? Tell me, Ron. I want you guys to see what Ron just wrote. How many trades did you take, Ron? Just the last one. Well, how about the first two? Oh, you weren't available. Okay, Ron, do this. If you're going to calculate your winners and losers after every trade, you're going to last about 3 days. Tell me calculate your winners and losers after every 30 to 50 trades. Okay? All right. Thank you very much. And if you had a problem taking the trades, if you did not did the trades, don't blame us for giving you winners today. We gave you 3 trades, 2 were winners, 1 was a loser. You would have been up 80 ticks. That's it. That's the bottom line. I don't want to argue about it anymore. So how did futures come around? How did futures originally come around? Futures came around very, very, very simply. Very, very simply. Futures came around with and please host for everybody so everybody could see this. All right? Everybody could say, this is a time of transparency. All right. So futures came around because when Americans moved from England, they needed a way to hedge the product cost of boat deliveries. Do you guys understand what that means? When you took a boat, when Christopher Columbus took a boat from Europe to America, he didn't arrive in America on TWA 3 hours later. It took months to get to America. Well, what happened when you took lumber from Europe to America, but lumber shifted in price between those periods of time? I'm giving you a little history lesson here. Same thing with farmers if they want to hedge their prices. Futures did not originally come around because people wanted to trade the E-minis or trade the SPY. So let me see. Exactly, Hefe. Exactly. John, why are you asking me that here? While I have 563 people here and 60 things. Do you think maybe emailing me would be more appropriate for a question that only you have? Thank you. Folks, some of you guys, I just don't get you. I don't get you. I really just don't get some of you. This is not a customer service session. I'm teaching you a class. All right. So futures originally were invented to hedge existing value, okay? Hedge existing value. Futures are still used to hedge. Insurance companies, banks, they use futures to hedge value. So a futures contract is a fixed contract, okay? It's not like shares where you can buy 5 shares, 100 shares, 5,000 shares. It's a fixed contract. For example, the bond contract is a $100,000 contract. The S&P 500 contract is a $250,000 contract. Okay? So when you're trading shares and you want to balance positions with each other, right? Everything I'm saying is theoretical right now. I'm not giving you any trades or anything like that. But you have to just buy, okay, I have 500 shares of NVIDIA, I'll buy 1,000 shares of IBM or whatever, and they'll equalize each other, right? You can't do that when you're trading futures, because with futures, every contract has a fixed size. How do you equalize futures? You balance everything with your largest contract. Capiche? Now, I know that you don't understand this right now, but I'm giving you some really I'm actually giving you some really good stuff. So for example, when I was trading futures with Kevin Hassett, the guy who's in line to take over Powell's job, if we had 2 contracts of bonds, I would have to have X amount of contracts of corn to make up for the, you understand? You can only do it in contracts. So you fix everything to your largest contract, okay? Big difference. So what do we learn about futures so far? They're fixed contracts. They're not like shares. Well, because S&P, because the SPY futures became so popular, you wouldn't believe if I told you this, but when I started trading, they were $500 a point. So you started with $500 a point. Then you had $250 a point. Then you had $50 a point, and now you have $5 a point. Are all these contracts the same? No. First, you have the S&P 500, the big daddy. That's $250 a point. Okay. Then you have E-mini S&P. That's $50 a point. Then you have the micro S&P. That's $5 a point. Okay? Cyrus, I never said you should trade options on futures, and I've never told anybody they should trade options on futures. If you're going to trade options, you just trade options on stocks. If you're going to trade futures, you just trade futures. You don't trade options on futures. The only people who should be doing options on futures are people who are selling naked spreads, because futures give you all that leverage. Yeah, I'm just doing this. I'm just doing. Yeah, like I'm not getting paid for this. I don't have to talk about this. I could be trading right now, making money. I'm literally doing this because so many people wanted me to give you a session. So, you're Bugs right now. Bugs. Your screen name is Bugs right now. Okay. Okay. So let's continue. So first things first. Futures originally were not created for speculation. They're created for hedging. With time, they became more and more and more and more. They became more and more and more and more famous and popular with speculation. Okay, but hundreds of years ago, when we first moved to America from Europe, when the boats took weeks and weeks and months to get here, they were used as a hedge against prices, against unforeseeability. Okay, so you guys understand that. Nice. Great job, Forrest. Great job. Let me repost that for everybody. I see you've been taking my watch list trades in my pit channel yesterday. Good job. Good job. Good trades, too. I wanted to take Uber in my account, and I don't know. I got sidetracked, and anyway, I got to start trading more so I can afford my trip to Europe next year. I'm just messing around. When I first started in this business, I started out as a futures broker. Then I opened up my brokerage firm, and that's when I met my partners, and then I opened up a hedge fund. So I originally started out in futures. Many professional traders start out at futures and then switch to stocks, not the other way around. Okay, so because you use more technicals with futures. So back in the day, if you wanted to trade the SPY, you would have to have. I'm not sending anything right now. I'm just talking to you right now, Santiago. You would have had to use a $500 a point contract. Now, what does a $500 a point contract look like? If you went from 6285 to 6286, just 1 point, or how about from 6285 to 6290? That would be 5 times $500. That would be $2,500 to go from here to go to here, here to here. Well, a lot of folks realized that it was just too big. They wanted a smaller contract, so they started making the mini. Then they took the S&P and they halved it. Okay. Can you respond to Deanna? She asked something.
Yeah.
So they said, look, it's too big. 500 is too big. They halved it. They made it 250. So from 6285 to 6290, then it started being $250 a point. Okay. For a few years that worked out well, and then the word Globex was created. Remember T-Buzz with his Globex terminal? Well, Globex allowed computerized trading. So the pits were starting to go away. So computerized trading, they did the E-mini. And when the E-mini came out, it just exploded because E-mini gave folks a way to trade futures with $50 a point. All right. I agree with you. I'm going to go again next summer. Christopher, I'm going to go against next 4th of July.
Yes, Jesse, we did.
Is Matt not giving mini levels for? Yeah, we're not doing mini levels because of regulatory. Just work with the SPY. Yeah, we're not giving any more levels on minis, just the SPY. And look, guys, in case you're wondering, I just want to show you something. Look at the SPY. This is the SPY. This is the SPY, and this is E-mini. I want to ask you guys a question. Is there any difference between them? Look. So let me put one here versus the other. Look. Do I really need to do that? Let me ask you. Let me show you. Do I really need to give you both? Tell me. I mean, honestly, tell me. Do you see any difference between them? They're not the same, but they are the same. You understand? Scott, you understand what I'm saying? They're not the same, but they are the same. Do you see any difference in fluctuation between them? 99.999999. You can't have a difference between them. What if I sell one and buy the other? I can arbitrage them. Same thing. Same thing. So, SPY is just how many shares you buy or your options. This $5 a point if you're trading MES. Do you see any difference between this and this? Does anybody see any difference between them? I do. That's what I do, Bob. I follow one and trade the other. Is there any difference between them? For anybody who's telling me I need to give them futures prices, why? Why? Why can't I just give you the SPY prices? What would be the difference? No. I understand, Jesse. I understand. I get it. 99.999. Yeah. I mean, look at yourself. Look at the tick. Look at. I mean, they're identical. They cannot be not identical because they follow each other. They literally arbitrage each other in real time. What did Bob say? You can follow one and trade the other. Yeah, that's what I do. I look at the SPY and I execute on E-minis. So they're both identical down to a tick. Look, this is a futures contract. This is the SPY. Okay. Volume, you're not looking at volume. We're not looking at volume, John. Yeah. But no. The price is different, but they move identically. So you see how they're identical. Here you buy the option. Here you buy the you're just renting the future. You don't buy the future. You're just renting it. What you're doing is you're buying 5,000. So look. When you this ticker symbol MES, you're buying you're renting a $5,000 contract. You're renting it. You're putting in a very small token. How much is it? Well, if you go to large futures brokerage firms, it's $40 for day trading margin for the micro E-mini. What you're doing is you're getting a leverage here for $40. It's controlling a $5,000 asset. See this? You're getting leverage. $40 buys you $5,000 worth of leverage. That's the size of this contract. Do you need to remember that? No. Why? Because if you remember it, it's going to confuse the hell out of you. Remember it the way Uncle Roger has been remembering it for 30 years. This is $5 a point. That's all you need to know. How is knowing the size of the contract going to help you trade it? Do you know how many emails I got asking me, well, can you explain it? Yes, $5 a point. But what about how big it is? How's it going to help you? How is it going to help you? This is $5 a point. This is $50 a point. They're identical. Let me put them next to each other. These are identical. When I say identical, they're identical. It's the same computer driving both. There's just one is this is controlling this is a $5,000 contract. You're renting a $5,000 contract. You're renting a $50,000 contract. Okay? This is $50 a point. Can you say why even big traders prefer? Yes, I can, administrator, which is a great question. The reason big traders prefer micros is because they can let lead runners on. You can scale in and out. A lot of traders like to scale. They buy 5, then they buy another 5, then they sell 5, then they buy another 5, then they put a break-even stop, then they let a runner. That allows you to do this. Now, if you have a $500,000 account, you could probably do that with the E-mini. But if you have a small account, the micro will do it. So, what's the difference between MES and ES? As you could see, they are not virtually identical. They are identical down to the exact tick. Okay? So this is a $50,000 contract, and this is a $5,000 contract. Do you need to know that? No. All you need to know is $50 a point, $5 a point. That's all you need to know. I made a career in futures just knowing point values. I mean, I had to remember contract sizes later, but they're irrelevant. Yeah, it's just 1/10 the other. This controls this for $400. The futures broker will allow you to control, some futures brokers will allow you to control a $50,000 contract. Futures broker will allow you to control the $5,000 contract for $40. Do you guys think you have enough leverage there? $40, $5,000 contract, $400 for a $50,000 contract? What do you guys think? I think so too. From here, from 62.83 to 62.91, that's what 8 points, right? 8 times 50, that's $400 from here to here. From here to here is $400 or $40. It's a double-edged sword. It works both ways. So now you guys understand. Now you guys understand the difference in futures. Now, there's one more caveat, okay? Like options, futures contracts have expiration dates, okay? They have expiration dates. Good news for you, they don't have expiration dates every day, every week, every month. Every futures contract has different expiration dates. For example, currencies and bonds, they expire every month. E-minis and micro E-minis 4 times a year, every quarter. Okay? December, March, June, September. Capiche? 4 times. Let's see. Yeah, 4 times. December, what did I say? December, March, June, and September. Each is 3 months. Yes, each is 3 months. Yes, HMUZ. Thank you. H is March, M is, September is U, and Z is December, and June is M. So you don't have to do this in Thinkorswim. Thinkorswim automatically gives you the most liquid one. But they change every 3 months. So that means when you have 3 weeks left or 2 weeks left, here, let me show you. Let me show you what I'm talking about. Sometimes a picture is worth 1,000 words. You don't have to worry about this if you're day trading. I mean, it's all done for you now automatically. But back when I was a little kid walking 5 miles up the stairs, I obviously had to do that. Okay. What is the risk of futures contracts? Are you on the hook? Yes, you're on the hook for, well, here you're on the hook for 50,000. Here you're on the hook for 5,000. But here's the silver lining, SJ. Once your margin's done, they'll liquidate you. They're just going to auto liquidate you once you're done with your margin, because then they'll take the risk. They'll assume the risk. So once your margin is done, auto liquidate it. So you're never risking more than your margin, but in theory you're risking 50,000, and here you're risking 5,000. But there's not much of a risk if you're day trading. And again, they're going to auto liquidate you if you go beyond your margin. Okay, so you're never really risking all that amount. Okay, can you show me how to place MES? No, I'm not going to show you how to place anything. I'm showing you the ticker symbols. You can call thinkers. Kathy, I always have a motto. I'm not going to teach you things that you can learn anywhere else. How many other people know how to place trade in Thinkorswim other than me, Kathy? And why would I waste my time doing that right now? See my point? I'm trying to teach you guys. Okay. Customer service can show you how to watch a YouTube channel on how to put a trade on it. I gave you the ticker symbol. MES
dash MES
/ / I have it right here. You could see it. All right. So 5,000, 50,000. But I want to show you something. So look, every morning when we start, what do? I'm always telling you what the futures are doing, right? See, this is UZ. Look where the volume is. See how the volume is here? There's no volume here. See on the NASDAQ 100, U versus Z, how everything is in September right now? Well, as we get closer to August, as we get into August, you're going to see volume start moving more here and out of here, okay? When you see more volume here than here, that means you're supposed to be trading the front month contract, not the back month contract. I'm giving you some words of wisdom and terminology, okay? Understand? So you see how you have 2, September, December. You have all of them here. Here, let me show you what I'm talking about. Here, let me show you. ESU25, that's the full ticker symbol. You don't have to do this in most brokerages anymore. But look, 700,000 volume. At the mid-June sometimes, this is going to start picking up. When this picks up, that'll become a front month contract. Okay? Now, because you're using Thinkorswim, it does it for you automatically. It automatically makes you trade the front month contract. So you don't have to even do that if you use Thinkorswim. So again, now I'm going to just go ahead and so now you have the ES here, you have the micro here. I'm going to put the SPY here instead, and you'll see how they're identical. As I said, they're identical. That's the bar. See that? Identical, identical, identical. The VWAP, the whole 9 yards. How do I like to do it? I like to always use the SPY, and I prefer to execute on the E-mini. So my entry and exit signals would come on the SPY, but I would just execute the trade. Basically, I would use the futures as a option for the SPY. So instead of using a SPY option, I would just use the E-mini. And here's the ticker symbol. And you would execute it just like you would execute IBM. Okay? So again, / MES. Again, let me just show you how similar they are. Look, what has this been doing the last? Same thing. Look, we bottomed out at what time? 11:15, 11:15, same thing. It's a proxy. You use this as a proxy. Okay? Now, what about liquidity? Liquidity on E-mini or micro E-mini is amazing. Why is it amazing? Because everybody likes to trade it. You think you're the only ones who likes this? It's become the most popular contract in the futures times 100. Okay? Since it happened. Everybody loves it. This 80% of futures traders just trade the E-mini. The liquidity is like butter. You don't need limit orders. Well, we don't like futures. We like options on the SPY. Okay, fine. Buy the at the money option. So let's say I gave you a signal right now. Where's this? It's at 622.13. You would buy the 622 call expiring tomorrow. That's it. That's it. How are options on those? Like butter. 1 cent spread. Let me show you. $622. Bid 168, mid 169, offer 170. Look at the volume. Look at the volume. Do you see the volume? Do you think you're going to have a problem getting filled in any of these? 121, 122, 126, 127? And and on the futures, it's just last price. Nobody even goes by bid or offer. They just go by last price. They're highly, highly liquid. Highly, highly liquid. When should you use futures and when should you use options? This is a good question. If the market's really, really volatile, really, really volatile, like crazy volatile, it makes more sense to use an option than the future. And I'll explain to you why. Because if the market's really volatile, it means it can go against you. It's like somebody said, it's a double-edged sword. Remember, volatility works your way and against you. You're buying leverage. Leverage can go this way and this way. If the market gets halted, or if there's an unforeseeable move, or if there's a gap during the session, your liability is potentially unlimited. Potentially. Yes, Kirk. You only use market orders with this service, or with any futures. Well, not any futures. This future, not with oats. With S&P 500, orange juice oats, those are not very liquid. But with E-minis, yes, and micros, yes, they're like butter. They're like butter. You can just keep buying and selling them all day long. But why do you want to use option? Option, if there's unforeseeable risk, your option, you buy an option for $200, the market drops 400 points, you got to take a leak in the bathroom, you get a parabolic move, okay, you lose your $200-300. On the futures, you can lose your shirt. Now again, if you're sitting it in front of your computer, if you're executing like this, if you have a normal broker, they'll exit you out when your margin's at zero, because when you go below zero, they start picking up your bill. Futures brokers don't like to pick up your bill. Trust me, they don't. So I ate a $70,000. Do you guys want me to tell you a story of how I took a $75,000-80,000 loss one day in like 15 minutes? Okay. I had a client. This is going back to 2005. Lost a Porsche 911 in one day. That's how much a 911 was, 80,000 at that time. So I had a client and he sold naked options on natural gas. And he did it. I left the office a little earlier and he did it with my assistant, and my assistant didn't catch it. And the next day, natural gas exploded. He filed bankruptcy. I had to pick up his tab. I had to make it good with the FCM. So I was on the hook for about 80, $90,000. Futures, true story. And it was my fault. It wasn't even the guy's fault. I mean, I felt bad for him. He filed BK. So brokers have to pick up the tab. Brokers don't like to pick up the tab. They're going to liquidate your ass as soon as you go negative, or right before you go negative. So in theory, your risk is not that high with futures in theory, but things happen. So if the market is really wild and crazy, thanks, Dave. If the market is really wild and crazy, um, I think options are better than futures. But if the market is relatively stable, which it is 99.9% of the time, futures are fine. If you're sitting at your desk all day, futures are fine. If you use stop losses, futures are fine. So again, I'm just giving you. I'm not trying to get you to trade one or the other. My job here is to explain to you the difference between both sides of the fence, so you understand what you're dealing with. There are options on futures. The problem, Rice, is you don't need it. You don't need it. You could do options on the E-mini. They're not that liquid. They're not that popular. Everybody likes the underlying. Options on futures are great for spreads. Let me explain to you why. Remember, I said a futures contract is a fixed contract, right? So the value of the options are much, much bigger and a lot more attractive. Futures options are really good for spreads. A futures spread versus a stock spread will be amazing. You can actually get premium for going far out. Where on stocks, if you go a little far out, you get like 10 cents. On futures, you can go far out and you can actually because there's so much leverage, you can actually get some money out of it. So futures options are really, really great for futures options are really, really good for spreads, the Jack Carter type of trades. Now, I'm going to give you guys a little, yeah, exactly, Marie. So, yeah, that's what I'm trying to say. Then why do people trade with stock option spreads? Because to lower their risk. I'm talking about income trading, I'm talking about taking in credit, not debit spreads that reduce your risk. I'm talking about income trading. As a matter of fact, let's see how good my memory is. David Kaplan. Yeah, I still got it, folks. I still got it. Now, this book has been out of print for 30 years, and I still remember it. This book, if you guys ever have a chance to buy this book, if you ever want to be a professional options trader on futures, this is the book. So let me tell you a little bit about this guy. This guy had a futures brokerage in within an hour of Los Angeles. I visited him a few times, and his whole strategy was selling naked options on futures, which is a disaster over time. But there's ways to hedge yourself. The name of his brokerage firm was called Opportunities in Options. David Kaplan, Opportunities in Options. How do I remember all this 30 years? I don't even know, but I do. If you ever want to, it's a little book. It's a little book like this. But if you ever want to learn how to, I don't remember, John. But if you ever want to learn how to trade futures for income, options on futures, this is the book to get. This book changed my life, okay? I know it's out of print, but you could still get it. Yeah, Opportunities in Options was the name of his company. And he would send everybody a little booklet. And this booklet was basically a summarized version of this book. And I highly recommend it if you want to learn how to do income strategies on options. Okay, because they're much better on futures than they are on stocks. Okay, if you want to do spreads like debit spreads to save money, that's a whole different world. I'm talking about income strategies. Okay, again, I've read maybe 1,000 books on futures and stocks, and I'm going to say this is in the top five. You can't buy it now; it's out of print. You're going to have to get it. If you do get this book, would you send me a copy? Would you guys make a copy of it and send it to me? Or if there's a PDF version of it, would you send it to me? It would be amazing. No, you can't get. Like I said, this is a long time ago. This guy was really good. He was just not very risk adverse, but he had the right idea. Okay, so for the next 10 minutes, I want Matt. So, what did we talk about today? I talked about the origin. Is this helpful to you guys? Is this helping you get a little better grasp on futures? Where did they originate? What was the purpose of their origination? See, you guys never knew I knew so much about futures, how they started coming here from Europe because they needed a way to hedge prices. Um, and again, there's a lot of stuff about futures, taking delivery, all that. You don't need to worry about any of that. Futures you can go very deep into futures. You don't need to. You don't need to do that. You just need to know that this is a $5,000 contract. You're borrowing it. You're borrowing it for $40 if you go to a futures broker firm. If you go to a stockbroker, you're going to pay $2,000 to borrow it, which is insane. It's $5 a point. If you want $50 a point, then you got this one. Do they move the same way? They're identical. They are literally, they're not similar. They're identical. $50 a point, $5 a point. Obviously, unless you're a fool, you're going to start with this one and you're going to get good at it, and then you can move to this one. Okay, all right. That's the way you do it. So very, very, yeah. And you close your trade before the market closes. Naples fan, yeah. You don't hold overnight. Now remember, futures open virtually around the clock. That's the advantage of futures. Sometimes I'll be emailing with Richard, and it's like 8 o'clock at night, and we're trading futures. So you can offset futures at night. You can offset the only time futures close is between 5 and 6 p.m. for 1 hour. Is it 1 hour or 2 hours? I don't remember. Let's see.
They stopped trading at like 4:15.
4:15, right? Till yeah. No, that's the little. Okay, so this is really cool. This is really now. This is going back. Now we're going back. L just send me this. This is that little pamphlet that they would send you when you ask for account opening forms. This is that booklet that I said. That's that little booklet. This thing is worth its weight in gold. I'm not kidding. It's not going to help you day trade, but if you want to do income strategies, this little booklet is worth its weight in gold. They're no longer. They're out of business. They've been out of business for about 30 years. But it's so funny that you found this. But this is that little booklet. So they took this book and they made a little booklet out of it, and they would send it to you when you would open an account. And you know what? It worked, because after I read this booklet, I'm like, oh my God, this is like better than sliced bread. I'm going back 30 years right now, so give me a break. But if you can get your paws on this booklet, this is worth its weight in gold. I can't believe you found this, L. I honestly can't believe you found this. Why not hold it overnight? You can hold it overnight if you want. The link to this booklet, yes, right here. So yeah, this is the free. Remember, I said they would send you a little booklet. This is the freaking book. I can't imagine you found this. This is getting me so excited. Like you're bringing back memories from 30 years ago. Okay, this is like me. I was reading this when I was still in law school. I was reading this before I started my futures brokerage firm. This is a great booklet. If you guys can get this booklet, it's great. And then get the book. The book is just the bigger version of this. Yeah, right, exactly. After 4:45, overnight margin. Anyway, so sorry, I don't mean to. So many memories. You guys are bringing back a lot of memories. Maybe I can have Hassett and Kalamiris here and bring back more memories. Okay, now for the next 10 minutes, Matt is going to teach you guys. So we're going to switch gears right now. So I covered with you specifically what are futures contracts, the difference between futures contracts and regular options, when to trade options, when to trade futures, what futures are all about, front month versus back month, how there's 4 different contracts in a year. You don't really have to worry about that. And all you have to do at the end of and you'll get a notice from your broker, by the way, if you're long. And if you're day trading, it'll automatically switch. But you could see right here when volume switches over. I mean, I show this to you every morning. When I start the morning, why do you think I look at futures? Because they are open overnight. So futures tell me what I'm expecting from the stock market before the morning. Remember, we start the morning show with this view every day, right? Why do you think that is? Because I want to know what's going on. So when volume here starts getting lower and higher here, it's time to change. You got to do it 4 times a year. It's not a big deal. And you don't have to worry about it unless you're day trading. You don't have to worry about futures on these, on options on these. Just worry about the underlying. And if you get too confused, you just need to worry about the fact that this is $5 a point, and if you take the M away, the micro, the M away, right here, it becomes $5 a point. This is all going to be recorded. It's put in the members area. Yeah. Oh, that's a good question for you, Richard from Omar. All right. Very, very, very simple. Okay. Now you have a good, and you guys understand how you can trade interchangeably. Why I always talk about SPY and E-minis in the same breath. Do you guys, does anybody not see why? Does anybody need me to give you an explanation? John says market rallied and top up soon after open, correct down, then drift. Just what I said. Yeah, it's exactly what I said. We're going to open now. We're going to fool in a bunch of weak hands, and then we're going to kind of drift lower, which is exactly what we've been doing. John, I've been doing this for a long time. I've been doing this for a long time. Okay. I was trading 5 years before I met my wife. No, I was trading for 7 years before I met my wife. And I've been with my wife for 25 years. So six and a half years before I met my wife. I've been trading for a long time. All right. Glad to be VIP. Me too, Kevin. Welcome, welcome, welcome. Always try to answer as many questions. Yes, Richard's great. All right, guys. Was Trump supposed to talk during lunchtime, Matt?
Not that I've seen.
No? Okay. All right. Well, I don't pay attention to it as much anymore.
He sent more letters out today.
Oh, more letters out. Okay. All right. I don't get. It's going into one year and out the other year at this point. All right, guys. Matt is now going to do something cool for you. He's going to teach you how he finds the buzzer or the lottery trades in Trading Zone Live in the last half hour of the day. Do you guys want to learn how we find those trades at the last half hour of the day? Well, don't say yes all at once now. So when we launched Trading Zone Live, we weren't going to do this, but we're nice guys. We decided to do this. So Matt is going to show you step by step of how he picks those trades at 3:30 in the afternoon. Okay. He's going to do it right now. Matt, I'm going to give you the screen. Now, I've been talking live now for 4 hours straight. I'm a little tired. I'm going to take a few minutes to myself, maybe step out for a little bit, and then I'll be back and I'll see you guys later. And then I'll start responding to your emails and hopefully I'll issue some trades today. But take this time, Matt. Please let Matt show you this so you know exactly how he picks the trades. Okay. Matt, don't hold anything back. Okay.
Okay.
All right. And don't say more than 10 words. I'm just kidding.
Here. All right. Where'd the chat go? I hate that about Zoom. Okay. Let me actually go back to, let's go 5 day, 5 minute. And I'm going to take off the AZP signals just so we can see this a little more clearly. Okay. So I hope everyone is familiar with the market on close imbalances. Are most people familiar with that? First wave comes out at 350. Second wave comes out at 355. Okay, so if you don't know, they publish the market on close orders on the exchange at 350, and then they publish them again at 355. So you can see if there's an imbalance. They can see if there's an imbalance at the close. Same thing as a market on open order. So those numbers will cause sharp moves in the market in the last 10 minutes of the day. You can see it right here. Look at these two candles. You can see them there. Let's see, 350. Yesterday was kind of a nothing burger, which was unfortunate. Same thing right here. Last two 5-minute candles or last 10 minutes. Same thing here. So you get a pretty sharp move at the end of the day. What I like to do, yes, the market closes at 4:15. So you also have the aftermarket. That's another setup we might do in the future as well. Take advantage of that. So what I like to do is look at the main trend of the day, and I will usually use the internals to kind of see. Today we're pretty choppy, but a lot of days, the vold, the tick, and the ad will be clearly bullish or bias, and especially if that doesn't match price action in the last hour or so of the day, that it usually correct itself in the last 15 minutes. So what I like to do is look at where the internals are pushing us. If the market really wants to go up or wants to go down, and then I look for usually one strike out of the money. I look for an option one strike out of the money that is fairly low in value. And what will happen too is if you get a move in the opposite direction, like right before the end of the day, so like 335, 340. So you see, like right here, yesterday we had 330, 335, we had this nice down move right here. The 621 option will lose a significant amount of value on this move right here. And because it's kind of going out of that gamma squeeze area. And then if you get a mean revert, it'll quickly gain all that back, all that value back. So you'll see this option go from probably like 22 cents to 10 cents or less on these three candles. And the idea is if this counter move is in the opposite direction of the internals, then usually we'll get a sharp reversal. And we can gain all of that option value back. Because these options, when they have no time value in them, they get very sensitive if they're close to the money. So that's the basic premise. They don't work all the time, but when they do work, they work really well. So typically we're looking for minimum 50, but more like 100% plus winners on these trades. And then also, like Roger pointed out, you have until 4:15 to close these. So another thing you'll see too is if you put extended hours in the chart, whatever the sharpest move is in the last 5 to 10 minutes of the day, say if we run straight up or we move away from the VWAP on a consolidation day, on the 405 candle, you usually will see the after hours will push us back in the opposite direction. It's usually short covering. So there's also trades we might be experimenting with that as well, called like the 4 o'clock effectors. That's the main premise. There's a lot of nuance to it. It's not a super high probability system, although we've had decent accuracy with them. But the risk reward is so high. If you buy a 10-cent option in the last 15 minutes of the day, if it goes to zero, who cares, right? It's $10. Even if you bought 10 contracts, $100. But sometimes those options can go from 10 cents to 80 cents in 10 minutes. That's an 8x, 800. It's 8x return 800%. Where do you get that report? Richard, I'm not sure. I get it from the Squawk Box every day. They'll come over there and tell me. I know there's a way to see it through your brokers usually, but I don't know how to see it. All right, Jason. All right, folks. I'm gonna wrap up. I use Trade Exchange. This is it right here. They're talking right now about the bond auction.
And by the way, I recommended Trade Exchange to all of you 2 years ago, 18 months ago, a year ago, 6 months ago. And when everybody sends me info for the best trading source, it's Trade Exchange. It's made by traders for traders. We don't make any money out of it. We're not affiliated with them, but they are amazing. The only reason why I don't use it is because Matt is always using it, so I can never log in. No joke.
They are a little pricey.
How much are they?
I think it's like $80 a month.
I don't think it's that much.
Might
But
not
even if
be,
it is,
but it's
even
worth it.
it's worth every penny.
Yes.
Yeah. All right, folks. We will see you later. Thank you so much for being here. If there's any other questions, Roger at rogerscott.com, and I will have more of these